Hey everyone, welcome to Breakout Wednesday for the 9th of October 2024. It's currently 5 p.m. on the West Coast, 8 p.m. on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Chart of the S&P 500 flirted with new highs. Likewise, kind of around the world. A lot of bad, negative headlines out there, but the indices keep storming higher, and it's showing a lot of strength. China's really been the main story lately. I'm going to get into that a bit later. First of all, last week's setups, there wasn't really much that actually broke out. Deckers did. Poked its head up here, down, and so I'm still in it. I'm just letting this play out, okay? I'll follow that up later. Judo, I got unfortunately whipped out of judo. I just had to stop just below here and just whipped out here. So that's life. I was just protecting my position from here to here, and I just didn't want to give all this back, which happens sometimes. I'm pretty protective of that open kind of P&L, that paper P&L, and I hate seeing it get wiped away, and so that means I get stopped out sometimes when things carry on. We'll see what happens on judo, but I'm out of the rest of my judo trade. So that's that. Now, some new setups before I talk about kind of the bigger picture things and a few other ideas. TLX on the ASX is kind of base in here, and this is really is kind of my bread and butter, and it's like that PME trade that I was talking about a lot. God, it went up again today. Shit, I sold that guy so early. I thought I'd sold, I sold it. Shit, where was it? God, I don't know. I talked about it on Breakout Wednesday, but I think it was here on a break of this candle here, like 172 or something for the last bit of it, and it just kept going up, right? And just, this was in a major uptrend. It was an expensive stock, obviously good revenue, growing, blah, blah, blah. Came up here, tight little base, right? And TLX is a little different, probably even a better setup, but, obviously long-term uptrend, sitting at all-time highs, bit of a saucer here, bit of a flush out here, coming up here. This is a loose base. You'd never take this breakout there, right? But now it's formed this little handle, okay? And so that gives me good risk reward because I can have my stop below this handle, and I can have a crack at 3 to 1, 4 to 1, 5 to 1 risk reward. Okay, so TLX is probably my main idea at the moment. SSG, talked about this last week a lot. I'm not going to talk about it again. That's a monthly chart. Enough said. And still waiting. The fact that it's come down a lot today, it's come down a bit the last week, it's just brilliant, right? Because you don't want it going from here and breaking out. If it can just now play around here for a few weeks, just in this range, and then break out, then that's going to go from a very, very huge base to an awesome base with a tight right-hand side as well, okay, which will make it just perfection. What else is there? AVH. There's only a couple trades I'm really looking at, but AVH, okay, it's had a bit of a sell-off today, that's right. So, awesome, right? If it can just hold this little handle, who gives a shit that it's selling off? If that can just keep base in for as long as possible, it might even give a chance for this 200-day to flatten out and start turning up. So, perfection is forming on AVH. Let's just wait and see what happens. STP, what's going on with STP today? STP is just basing, all right? So let's see what happens with that guy. All right, and that's it. So it's mainly TLX, SSG, AVH that I'm watching. There are other stuff setting up, but they're the only ones I want to talk about right now. Okay, so obviously everyone knows what's happening in the world, obviously with war and stuff. And obviously the big thing that's going on is China. Okay, I talked about it a bit last week, had the big trade in YUMC, and I just, I think it's important pointing out that when people own BH and Rio and FMG, they're kind of betting on China too, right? Because it's so correlated. And it was literally a few weeks ago where we had all the economists and kind of predictors, having a pretty bearish outlook on BH and Rio and the major miners due to the slowdown in China, and then now with BH we've had this huge rally off those lows, and maybe this is the first leg up. Okay, I'm not sure, but certainly I did mean to pick more up in the long-term self-managed super fund down here. I missed it. So now what's my plan if I want to get more of this, just because I like accumulating this guy over the long term. I've been doing it for ages, and I want to, it's just personal thing. I like getting as much as I can on big dips. And so let's say this guy now comes back, and so let's say this is leg one, okay, for those who have studied any Elliott wave or just basic Gann or elite wave or whatever. Let's say that's Fibonacci. Let's say that's leg 1. And what I want to see when a leg 1 is now pull back about 72, 78%, so down here. So that's about $40. So if I can have a pullback to $40, I'm probably going to add that to self-managed super fund, okay? And just there's a way of playing that, the commodities future and obviously copper and iron ore and all that sort of shit, right? And even China, right? It's a way of just playing China. And so if you have a look and say, for examples, right? Big retracement, first leg up. Okay, and this is a deep retracement. Usually when you have your first leg up, if you read the rules of Elliott Wave, that the first leg down should be really deep, and it's amazing. Like big downtrend, first leg up, deep retracement. Big downtrend, first leg up, big retracement. So usually always around the kind of the 78% or deeper retracement. And so if we get that here, I'm going to add to that. I just thought that was a bit of a side note. The Asia stuff's amazing, and look, who knows how that's going to play out, but I'm certainly just watching Asia stocks. Barber is just, is got to be the one that it just makes the most sense. I mean, this stock was down 90%, yet if you look over the last, I was reading this thing the other day, if you look over the last 5 or 6 years, the growth of this actual business itself has been crazy. Like this company is amazing, and obviously it's got the China risk behind it, which a lot of people got turned off on, but this stock, it's going to give some more opportunities, and it's the smart way to play it directly or by the Asia ETF, because if Barber goes to the moon, and nearly guarantee you this thing's going to go up if you look at the weight in. All right, so that's that. Now, and I just thought it was interesting. Just also, let's just have a look at the energy ETF. Okay, it's just everyone's really negative on oil because oil stocks have been getting hammered, but there's something inside of me just thinks, just don't turn your eye off to that stuff, because these ETFs aren't looking all that bearish. What is the other one? I wanted to quickly go through the financials. Looks like it's setting up again. And obviously gold. Like gold's been the big story lately, hasn't it? And the thing about gold is that the gold stocks have been harder to trade. I mean, Northern Star's gone up. You've had a few that have had big runs, but it's like they're way harder to trade. I got whipped out an SPR for a small loss the other day. Whereas those who have kind of just been buying gold ETF and just hanging out and doing nothing, this has been a really consistent, reliable trend. And there's got to be a lot said for ETFs in scenarios like that. The other thing that I'm trying not to take my eyes off is just the demand for AI, and that this is going to be ongoing. NVDA had a breakout last night, and the night before last, and I've got a starter in it, and it's just, I think people have forgot about it because it was the leader of kind of early this year and it was going nuts, but I don't know. I mean, maybe this thing's going to keep leading the next leg up too. I mean, this is a decent base, tightened here in it now, so we'll see how she plays out. And just looking like it's not just going to be in a video, obviously. There are other ones, and I'm trying to find them. There's Marvel, there's a semiconductor stock, not the comic company. And, this is setting up here. Maybe, is this tight in here on this right-hand side? I'm trying to just do some digging and reading and research into some of the alternatives to NVIDIA that might be leading. Because I think that, like, the classic one that people go to, like AMD, it's maybe kind of lagging a bit. Maybe it's not. Shit. But I'm trying to keep an open mind, and I'm trying to spend a lot of time trying to find these, because just the demand for this stuff. And it's the thing about AI, like AI just keeps cranking out huge demand. It's not as if it just takes and then just doesn't need, the next month it doesn't need it, right? It's just continuous demand from these semi-stocks. And AI is going to just fuel this ongoing, and so I'm just hunting for the next one. It's like this ARM as well, which this is on the Nasdaq, which I think is worth keeping an eye on, and I'm just watching those guys base. But in terms of new trades for me, I'm kind of heavy at the moment. I took the NVIDIA trade, and I'm watching TLX, SSG, AVH on the ASX, and and that's it. I guess. I used to want to get wire in this range, and I missed that. And it's just like, I've been thinking like, shit, do I want wire and BH? I mean, I've been accumulating BH for a long time. I mean, I think that they're probably relatively heavily correlated. I mean, if you look at a chart, it's pretty obvious they are. And it's like, and I'm not sure that I really want both in my long-term portfolio. Because I already own a bit of BH, I'm probably just going to keep buying that. It pays a bigger dividend too. This thing's only got like a 2.5%. Whereas the BH is currently yielding at today's price is like 5, I think, fully franked. And for those who are lucky enough to be buying it for ages, obviously you're getting a much better yield if you bought your shares for sweet F4, do you know what I mean? Alright, so that's about it, short and sharp. There are, if you see any setups like this forming, post them to the members area, guys, because this is where the money's at. There was one other one that Rod posted. One sec. Yeah, Rod posted DSE, and that has some serious tightening potential, doesn't it? My only thing about it is that it only did 28,000 shares today, and you can just tell by looking at it. Just these candles here, that's like these railroad tracks are caught in. For those who trade forex ever, there's a candlestick chart pattern called railway tracks, and it's like kind of doing it here, and it's a common thing in stocks when you see pretty illiquid companies and they put these railway tracks in, just up down, and this is all these wicks. It's just not that liquid, but but that is tightening. And I just want to quickly talk about this gap down in EVR. It's not EVR, one sec. EXL, was it? Yeah, crap, one sec. Yeah, EXR, here we go. And I think a few people got caught in this. And look, if you trade for long enough, you're gonna get caught in gap downs, right? Anyone that says they haven't, they probably need to cut those people out of your life. I've been caught in heaps, I'm not proud of it, but it is just part of it. And that's my most recent one. Which I was very transparent and open about. It was one of my biggest trades that I've been in a long time. I had such confidence in the trade just because of this base and blah blah blah, and bang, right? And I still think back on that and how much money I lost that day, because I don't even think I sold it at open. I think I was late and I was getting out. I forget, but it wasn't a great exit on that day either. And it was painful. Had to really grind and work my ass off to make that cash back. But if you're in this game for long enough, you're going to have a bunch. I'll probably get one of these a year, right? Maybe not quite, maybe one every 18 months. But I'm trading a lot and taking risks, and and if you find yourself getting caught in a gap down, I mean, all that is telling you is that you're a risk taker, right? And that you're in the game. And I can tell you what, if you keep just putting yourself in the game, it's not going to be that much, the time will pass until you catch another hum, and you double your money. And so I just think, don't beat yourself up, because this is a game we're all in. We love it. It's hard, it's ruthless, it's risky, but that's kind of why we do it. And the rewards are massive if you just don't give up. You just keep grinding, and you just get better and better and better and better. And I've already made my comments on EXR in the forum, and I just think, just quickly for those who see it like this, that playing around in penny stocks, very few people make it, that way. It's better to go where the big institutions are going, and the big institutions are punching their money into big, fast-moving, successful companies. Okay. Your NVDAs, your Teslas, your Apples, and the ASX, your PMEs, this is where the big institutions and the funds are going, because they've got big orders to fill, and they can get absorbed because it's liquid and these things move. Okay, and I just think that that the tiny little penny dreadfuls, it's a much, much, much harder game to lose money. And if you're gonna, to make money, and if you're gonna be playing the game, why not just play in stocks where it's easy to make money, right? Compared to really stacking the odds against you in this kind of penny world. I'm not saying but P.S. I'm not saying that I'm never going to trade them again, because I do all the time, and not all the time, but I just keep my bets small in them, okay? Because it's way risky. Alright, I didn't mean to really even talk about that, just kind of crapped on, but that's it. I'm going to piss off. Cheers, catch up.